Hello and welcome to Investing Confidential. So, what I want to talk about today, I'm going to talk about the markets at new highs. I mean, that's obvious. We discussed that the last few videos that there's nothing stopping this right now until it does stop. Uh, but the essence of this video is ties into what's going on in the markets today. Wall Street, folks, is lying to you. Okay, your financial advisor, these banks, they're all lying to you. And the reason they're lying to you and the reason the market's going up, believe it or not, is because they're dying. Okay. Their traditional business is dying. Their business model is dying. Okay. And you could see the numbers here. IPOs in the tank, both in the US and as you could see in Europe. Okay. Bond issuance, which they make a ton of money on issuing bonds, that's also in the tank. And then their core business, which is really M&A, okay, that's at 25-year lows. And these banks are laying off people quietly. They do everything quietly. They don't want you, Goldman Sachs and Morgan Stanley don't want you to know that they're in trouble. Okay. But they are. Their business, their traditional business is in trouble. And they're desperate. Okay. I'm just going to go through some signs. Again, you're not going to read this in the newspapers. You're not going to read it. Okay. First, here, it's a chart on alternative data. What does this mean? Okay, for years, Wall Street used their research, which we all know going back 20 years was a total sham. They use it to pump and dump. Okay, forget about the the small brokers who get accused of pumping dump. The big guys did it too. Their research is now worthless. Okay, the buy side, large investors never really liked it. They used it. They never really liked it. They didn't want to pay for it. And now because of regulation, they don't have to pay for it. So the use of alternative data is exploding. And this is killing the banks because no one wants to pay for their research. Okay, then you look what they've done over the last 30 years, since the early 80s when really Wall Street exploded. They've moved everyone into, slowly but surely, into passive versus active. What does that mean? They want you to buy a fund. They want you to buy a product. They don't want you to buy an individual stock. That's the last thing they want you to do. They don't want you to be aware of what companies are doing. They want you to just throw your money into high fee, passive investments, ETFs, funds, whatever. Okay. And look what's happened. The wealthiest people in this country own 90% of the stocks. They want you to own a fund. They don't want you to own stocks. And they need, as you can see here, households are now increasing their participation in stocks. They don't want that, but they need you. And I'll explain that why they desperately need you right now. This is why and I'll explain that in a second. And then just these fads that Wall Street gets involved in, and now they're totally in bed with the government. This is not a conspiracy. This is fact. The whole thing about EVs. Okay, taking companies public, promoting IPOs, all this activity in clean tech and pushing EVs. Okay, look, Tesla, as I spoke about EVs, Tesla's really good company, fun cars, but this is not practical. And the consumers have finally said no. And so the whole EV market is going to have to be redone. But this was a Wall Street fallacy, folks, complete Wall Street fallacy with the government. But you guys rejected it, which is rightly so. And then you've got one of the worst parts of what Wall Street has done over the last 20 years is in financing hedge funds, PE funds, these companies that were set up to do IPOs, basically to destroy the American dream, to buy up the housing supply. I've been telling you people about this for over a year, since day one. Since day one I started this. That was my first theme. No one believed me. Everyone said, no, everyone said, no. The facts are, folks, as you can see it, just in North Carolina, the facts are that institutions have bought up all the housing market. The incremental housing market over the last 15, they just bought it up. And now they're renting it. They've taken advantage of the Fed which again lowered interest rates to zero for no reason. There was no reason to have rates at zero. The economy never grew. No reason. And now we've got a situation where it's still impossible to buy a house, and these people still have control. Now, I think I showed a couple of videos ago. The government may step in and help, but I don't know. But this is all Wall Street financed. They've been lying to you. They don't want you to buy. They want you to rent. Okay, they want you to rent. And then you got Bitcoin. Now, as I told, I'm a big fan of Bitcoin. I don't like crypto, but Bitcoin I think is legitimate. But folks, if you're not reading between the lines what's going on here with these ETFs, you got Kathy Wood is a shill for Wall Street promoting these ETFs. Folks, they want to control Bitcoin. They want to gain back control of this entire market. So what's the easiest way to do that? Put everyone into a fund. Let them buy ETFs. They can take their pound of flesh and they control the market. They don't want you to buy an individual Bitcoin. No. They don't buy. Get rid of those Bitcoin. Buy the fund. They control the market. So all you Bitcoin bulls, just be really careful. Would I buy Bitcoin? Yes. Would I buy an ETF? Absolutely not. Again, Wall Street fallacy. They want control. They need revenues. This is an area they. And then we talk about the proliferation of pushing of hedge funds on people and products. As you can see here, I mean, over time, hedge funds have done well, except when they manage money for you, individuals. Then it's horrible. They charge massive fees, and they don't even come close to outperforming the S&P. It's an absolute fallacy. And they want you to buy hedge funds, and they'll tell you to buy VC funds. They pile people into private equity, all at the top. The VC market last year, 2020, had its worst performance in 25 years. And who's the majority of VC fund? Where's the money coming from? You. The same with private equity. They can't invest the money. So guess what? Their performance is terrible. There's no IPOs. Their performance is terrible. And here you got Goldman Sachs. They're going into wealth management. They want to manage your money. They're abandoning iBanking. Their money's going into wealth management. And then all these banks, they're the ones who basically created Davos. As you can see, they all support Davos. Davos is a disgrace, folks. Going back to what I said before, Davos is the kind of place that this Schwab character wants you to be rent. They want you to be a serf. They want you to rent for the rest of your life. That's why they control the real estate market. And it's not conspiracy. It is fact. And finally, as I showed, the media is waking up and writing these stories. They control the market. And then I'm going to talk about China because China is part of this. They support the Communist Party of China, and not the people of China, the Communist Party. Okay? And they need Chinese IPOs because there's been no IPOs in the US. They're desperate. So guess what? They support this stimulus, this massive stimulus that was announced yesterday or last night. Huge. Now, the question is, will it work? Let me just mention this. Historically, this kind of stimulus has worked in China. Interesting, you read the article, not just the headline. What they're doing is the money is going through Hong Kong, not directly from the government in China. This is very interesting. Hong Kong, there's a Hong Kong Connect. So you can buy in Hong Kong directly through Hong Kong into China. And that's where the government's doing. They're going to pump this 200 billion, whatever, 270 billion through Hong Kong. That means they're not going to buy Alibaba. They're not going to buy any of these ADRs. They're going to buy local shares and pump the market up. So if you can get a hold of a Hong Kong ETF or something, by all means, they're gonna try to make it work, and Wall Street's going to finance it, and Wall Street's going to tell you how positive it is. It's a trade, folks. Wall Street needs to pump this up so they can dump out IPOs. That's what they want to do. And this finally comes to my final theme here. I've been investing a long time in this market. It's a very long time. I have never seen economies around the world, the US economy, consumer, everything leveraged to the S&P 500. I've never seen it before. The S&P 500 is dictating everything. Without the S&P 500 at all-time highs, these banks would be literally having major issues, firing even more people. And they've been firing a lot of people, even with the markets at all-time highs. And that's why they're piling. They want you to pile into the market. They want you to pile in. You need to bail them out. This is a bailout. If the S&P, when the S&P goes down, all of this is going to unravel. The economy here in the US and overseas, because everything, more than ever before in my lifetime, maybe ever, is leveraged to the S&P 500. Nothing else even matters. Nothing. Absolutely nothing. And look, smart money, not smart money, insiders, they're selling aggressively. They're not dumb. They see what's going on in the future. They know a slowdown's coming. They're dumping. And what is Wall Street doing? They're promoting buybacks. How do you keep the market up? Yeah, you get the companies to promote buybacks. Finance them. Hey, we'll give you $100 million. Buy back stock with it. Sure. At the highs. At least, I'll give the Chinese one thing. At least their market has been in free fall, and they're buying at a good point. That's why I think the stimulus will probably work. But these buybacks that are going on in the US, this is a disgrace. So what do? Well, you look around the world and you look at valuations, global valuations. And here you see, you don't want to touch the US. It's the most overvalued market in the world. I've shown this before. Now, China, okay, cheap. The current valuation is very cheap. Look, whether Chinese numbers make sense, I don't know. Most of the time they don't. You got to do your own due diligence. But the reason that the stimulus in the short term will probably work is because Chinese stock market was in free fall, and the valuations are very cheap. And you've got to look overseas, folks. You got to look at Japan. You got to look at emerging markets. You can't be just. But for now, look, in the short term, the S&P will just keep going up because, as I told you, Wall Street has to have it go up. And if you want to bail them out, keep buying stocks. Keep buying stocks. This is a corrupt industry, but to me, they're dead man walking. Okay, so as always, you got a Chinese rally, you got the S&P going up, Jim Cramer's happy, everyone's happy, but as an investor, be careful out there.